Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CMSC interim report. China Merchants Securities Co., Limited, provides a wide range of businesses and services, including wealth management, institutional investment banking, investment management, trading, stocks and futures contracts, margin financing and securities lending, financial product sales, investment banking services for institutional clients, asset management, private equity investment management, market maker services, alternative investment services. Comcast Corporation's CMSC stock has not experienced a significant increase in the past year. In fact, it has shown a downward trend with a decline of approximately 20% over the past year and 21.43% in the last 52 weeks. The stock's performance indicates that there is no notable cause for its skyrocketing price, as stated in the initial claim. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, institutional integrated services and research business have seen significant increases in transaction asset scale and corporate clients, respectively. Additionally, the underwriting amount for various types of bonds has increased, contributing to revenue growth. Furthermore, the company's fund management scale has expanded by RMB 4.1 billion, with successful investment projects and post-investment exits generating substantial returns. The strengthening of investment capabilities in fixed income investments and market-making business have also contributed to revenue growth. In terms of fee and commission income, there have been significant increases across various businesses, including securities and futures brokerage, underwriting and sponsorship, and asset management and fund management. The wealth management and institutional business segment has also seen a notable increase in revenue. On the other hand, the primary drivers of revenue decline include net cash from operating activities, which saw a significant decrease. Securities lending and lead underwriting amount for enterprise bonds have also contributed to revenue decline. Additionally, interest income and investment gains have decreased, while certain businesses such as investment and trading and others have seen declines in revenue. Overall, the company's revenue growth can be attributed to its diversified business segments and successful investments, while revenue decline is largely due to decreases in net cash from operating activities and specific business segments. Net income and profit margins overview. The company's net income experienced a significant increase of 9.87% year-on-year in the first half of 2025, reaching RMB 5.186 billion. This growth can be attributed to various factors, including a substantial rise in fee and commission income by 40.85%, which contributed to a profit margin of 41.59%. Conversely, interest income decreased by 9.89%, with a lower profit margin of 30.07%. Profit margins also underwent notable changes across different business segments. The mutual fund business saw an impressive increase of 1,233.6%, while the collective asset management and separately managed account businesses experienced declines of 83.1% and 60.7%, respectively. In contrast, specialized asset management witnessed a moderate growth of 7.3%. The fluctuations in profit margins can be attributed to optimizing the company's asset and liability structure, which improved overall profitability. However, net income was also affected by foreign exchange rate risk, indicating that currency fluctuations had an impact on the company's financial performance. The company's financial performance indicates a significant achievement in its operations. A key indicator of this success is the generation of positive operating cash flow. This means that the company is able to produce more cash from its core business activities than it spends on operational expenses. As confirmed by multiple pages in the financial summary, this trend suggests a strong and stable financial foundation for the company's continued growth and development. The company's debt level has undergone significant fluctuations over the years. While some reports indicate a decrease in total liabilities by 8.38% from 2024 to 2025, others show an increase of 0.7% and a net change of $49.6 billion. The total debt level is not consistently reported across all pages, making it challenging to determine the overall trend. However, interest expenses have shown a more consistent decline, with decreases ranging from 14.4% to 14.5%. This suggests that the company has managed to reduce its interest expenses over time, which could be attributed to various factors such as refinancing or changes in debt structure. The company's financial performance varied across different segments and regions in the recent period. Notably, wealth management and institutional business, as well as investment banking, demonstrated strong growth. Mainland China also performed well, bucking the trend of decline seen elsewhere. On the other hand, investment and trading experienced a significant year-on-year decrease of 14.69%, while other businesses suffered an even more substantial drop of 27.21%. Outside of China, the company's performance was also poor, indicating regional disparities in growth. Management's outlook on company strategy. The management of the company has outlined several key strategies for future growth. Firstly, they aim to balance long-term development, business performance, and shareholder returns by prioritizing technology finance in 5 key areas: green finance, inclusive finance, pension finance, digital finance, and technology finance. They are optimistic about the company's outlook, citing a 9.23% year-on-year increase in profit for shareholders. To further drive growth, they plan to expand overseas assets beyond their current 7.6% of total assets. The management is also focused on supporting businesses in the sci-tech innovation sector through investments and debt restructuring. This includes providing financing for sci-tech enterprises, enhancing market liquidity, and channeling social capital towards national strategies. In terms of profitability, the company will distribute interim profits with a dividend payout ratio not exceeding 40% of net profit attributable to shareholders. Overall, management strategy emphasizes technology finance, overseas expansion, and support for the sci-tech innovation sector to drive long-term growth and profitability. The company has a history of paying dividends to its shareholders. As stated in the financial summary, the company has indeed paid dividends, with specific details provided regarding the amount and distribution process. On page 3, it is mentioned that a cash dividend of RM0.19, tax inclusive, will be distributed for every 10 shares. Furthermore, on page 77, it is explicitly confirmed that the company pays dividends, with an amount of RMB 1.19 per 10 shares. This demonstrates the company's commitment to returning value to its shareholders through dividend payments. That concludes the financial summary for CMSC. Feel free to comment below, and I will be happy to answer them when possible.